I don't know if you've ever had this experience, but every once in a while, you'll have a great year. And you're going through life and you feel so good about the business you're building. And all of a sudden, bam! The tax bill comes in. And holy crap, it hurts. And it hurts bad. And this happens especially to small business owners. Because the tax code, that's the tax code right there. The tax code is massive, and there's so much inside it, designed to help business owners in America pay as little tax as legally possible. Because our country was founded on the idea that taxation without representation is wrong. And we want to be able to affect that taxation. So the tax code is designed for you, and it is designed for me to give us a framework to lower our tax burden, whether it's our taxable income or the taxes we pay in and of itself. And that's where I want to start, because the first thing you have to understand when it comes to tax strategy is how you move and use your money matters. Because tax strategy is not about saving money on taxes. Tax strategy is about how you use and move your money before it ever gets taxed. So that's where we start. Once you understand that we have to look at how we're using our money, the next thing you need to understand is the difference between a deduction and a tax credit. You see, a tax deduction lowers your taxable income. So if you're going out making money and you keep getting deductions, it lowers your taxable income, which is going to lower the amount you have to pay tax on. Now, tax credits, on the other hand, do not lower your taxable income. They do not make it easy, a lower number that's used to calculate your taxes. What a tax credit does is it pays your taxes dollar for dollar. And most people don't understand that. Most people do not understand that a tax credit is significantly better than a tax deduction. So, why does this matter? I'm so glad you asked. Thank you. It matters because if your goal is to build a life that you love and that you want, you get to do what you want to do over and over and over. If that is your goal, we need to look at every dollar and where we're spending it and how we're spending it. Because if we go out, let's use the example. Let's say we've got a business. We're making $100,000 net profit, round numbers. $100,000 net profit. We have $30,000 sitting in the bank. It's towards the end of the year. And we're starting to look at, okay, what do we need to be doing with our money to make sure we're paying as little tax as legally possible? Because tax strategy is just wealth building. That's why billionaires can grow their net worth so high without paying taxes. It's the asset that they own that's growing tax-free. Their wealth, their income, their bank account doesn't change. Their asset changes. That distinction is huge. So we go out, we have this money, $30,000 cash, end of the year. All right, let's do some tax strategy. So, do we want a deduction or a credit? That's the first thing you've got to decide. What are we trying to get? Let's pretend we say, you know what? Let's get a deduction. Now, we've made a decision. We're going to go after a deduction. There's a couple ways we can do it. We can go out and let's say you're in a remodeling company. One of the most common tax deductions, tax strategies people use at the end of the year is Section 179, where you can write off heavy equipment, you can write off equipment and deduct the entire purchase price in 1 year rather than capitalizing it and deducting it over time. So you can deduct it all right up front. So you go out and say, hey, I need a truck. We go buy a truck. That's all well and good if you need a truck. What if you don't? What if you just bought a truck last year using this same strategy? Guess what? Buying another truck when you don't need it, yes, you got the entire deduction, but guess what else? You got to pay what I call the stupid tax. I mean, no disrespect, but when you buy something, I learned this from my grandpa. When you buy something you don't need at a discount, it's not a discount. It's not a savings. You spent money on something you don't need, right? It sounds simple, but we do it all the time. So at the end of the year, don't go buy a truck just to buy a truck and lower your taxable income, unless you need a truck. So let's not use that strategy. Instead, let's go look at, all right, we want a deduction. Now, end of the year, I got some money in the bank. What I'm going to do is I'm going to go look and I'm going to see, okay, what's my goal for next year? I want a 10x. All right, we want a 10x. So that's the goal. We take that money and say, all right, based on our marketing, based on what's going on in the business, we want to invest that $30,000 this year in a marketing company. So we go write a check for $30,000 to marketer X ABC. And we say, listen, this is what we want to do. But we don't want to start until next year. So effectively what we've done is we've gone and bought services from someone else. We get the tax deduction. The money's flowing out of our asset. It flows into the marketer's asset. That means the marketer gets to pay tax on it. Yes. Right? So we share the tax burden with someone else. Let them handle that. Now we tell them next year, starting January 15th, we want to get going on our plan. So we don't have to do anything this year except spend the money. Starting next year, we get the value of the money we spent. And it's added into our asset at the beginning of the year so we can start growing the asset all year round. See, money is all about speed. Money loves speed. I love speed. So the faster you can turn money, the faster the economy turns. And that is the trick. That is the trick we need to understand when it comes to taxes. So you can go buy marketing at the end of the year, have it fulfilled the next year. We've got the tax deduction for this year. We get the value add next year, and we get to do tax strategy all over again with that investment. So that's if we wanted to get a tax deduction. Now, let's pretend we wanted to get a tax credit. You got $30,000 in the bank, you're hanging out, doing whatever you want. We don't really need to put money back in the asset. What can we do? Here's an idea. You have a house. Even if you don't, go buy a house and then put solar on it. Right now, there is a 26% tax credit for you personally when you put solar on your house. Maybe we wrap a roof in it because that tax credit's on the entire project. I believe it's up to like $125,000 that you can get the 26% tax credit on. Well, guess what? Now, that is going to make a big impact in your taxes. Because remember, the deduction lowers your taxable income. The tax credit pays your taxes dollar for dollar. So let's pretend you went out, got solar on your house. It was $100,000. We're using that for round numbers. So $100,000 project, you get $26,000 tax credit back. Great. Now, these tax credits, solar specifically, cannot create Okay, listen to this. They cannot create a refund. So if you owe $10,000 in taxes, this year you will pay 0 in taxes. And next year, because it was a $100,000 project, we got $26,000 in tax credits. Next year, we're going to owe or have another $16,000 in tax credits, because this year we used $10,000 to pay our taxes this year. So we still have these $16,000 in tax credits that we're going to count on next year's taxes. So we already know we're starting with a $16,000 tax credit. How freaking awesome is that? See, this is what tax strategy is about. It's not about saving money on taxes. It's about how you use and move your money as you build your life. Okay? So I want to encourage you guys, be cognizant of what you're doing, how you're doing, where you're doing it, because every single dollar matters. And every single dollar makes a difference. And the more strategy you put into spending your money, the lower your tax bill will be, and the easier it will be to build the life that you want to build for your family. And that's what life's about. Building a life you love. So, if you ever need help with taxes, that's kind of what we do at Entrepreneurial Tax Strategy. Who would have thought? So, reach out to us. Go to entrepreneurialtaxstrategy.com. Take a look at what it is we're doing. Take a look at how we're building our company to change the tax code. So it's easier on people like you to go out and make money and focus on what you're good at and leave the difficult stuff of understanding, that's the tax code right there, understanding that to professionals who know what they're doing. And I want to be totally transparent, guys. I'm not that professional. I'm a sales guy, I'm a marketing guy, I'm a business owner. I run this. I have hundreds of CPAs that work with us to take care of you. Okay? So anything I say, take it with a grain of salt, because I am not a CPA. I don't have that background, but I've worked with a lot of them, and I've learned how stupid I was when I was younger. When I first got into tax, that was my biggest lesson learned. I've made a bunch of dumb mistakes. That's why I'm doing what I'm doing right now. That's why I'm building Entrepreneurial Tax Strategy, to teach you what I didn't know and what cost me millions of dollars. So, together, let's go change America. Reach out. Let us know. We're here to help.